All right, let's talk about something that is, frankly, a huge deal for any small business owner. We're going to dive into a cautionary tale, a real-world story about one of the most common and most devastating mistakes that can make a great business completely impossible to sell.
I want to start with just one number, 80%. Just let that sit there for a second. It's a massive, kind of scary number, and it represents a hidden and pretty harsh reality in the world of small business.
Yep, you've heard that right. 4 out of every 5 businesses that get listed on the market, they never sell. The owners never get that exit they've been working towards for years. It's just a shocking failure rate when you think about it. So that begs the question, right? Why? Why are so many businesses failing to sell? Is it a bad market, the wrong industry, a crazy price? I mean, yeah, those things can be factors, but the number one reason is usually something much, much closer to home. It's often hiding in the owner's own desk drawer.
To really get this, let me tell you about a real encounter a business broker had. It perfectly lays out the problem. A seller comes to him, wants to list his business, and after a little bit of hemming and hawing, he finally hands over his financials.
And boom, right away, a giant red flag. The seller's own profit and loss statement, his P&L, claimed he made $150,000 in profit. Great, but his official tax return, the document he actually sent to the government, that showed a profit of only $35,000. Yikes, that is a huge gap.
The broker immediately saw where the problem was. It was a cool $120,000 in unreported cash revenue. The owner was taking cash payments, stuffing them in his pocket, and just pretending they never existed as far as the taxman was concerned.
Now, you might be thinking, hey, smart move, saved a bunch on taxes. But this little bonus, it comes with some seriously huge hidden dangers. This isn't some clever tax strategy. It's a decision that has life-changing consequences.
What this business owner was doing goes way, way beyond just being a little sloppy with the accounting. The federal government has a very specific and very serious legal name for it when you knowingly hide your income like this.
That's right. It's a felony. Hiding $120,000 in revenue isn't a small oopsie you can just fix later. It's a major crime, and the penalties are no joke. We're talking serious prison time. The business broker put it really bluntly to the seller. He told him straight up that not reporting that kind of cash is a go-to-jail item. There's no gray area there. The risk you're running isn't just financial, it's personal.
So when he was confronted with the fact that he'd committed a felony, what do you think the seller's excuse was? I bet you've heard it a million times. It's a justification a lot of people unfortunately use.
Yep, but everybody does it. That was his whole defense. This idea that it's just normal, That it's just part of the game for small businesses to skim a little cash off the top. It's a really common and really dangerous myth.
But let's be clear. That excuse completely falls apart the second you try to sell. I mean, think about it. If you're willing to lie to the IRS, a potential buyer has to assume you're lying to them too. Trust? Gone. Instantly. And good luck getting a bank loan. No bank is going to finance a deal based on wink-wink profits they can't actually prove. And here's the kicker. Everybody doesn't do it. The serious entrepreneurs, the ones who build companies with real transferable value, they don't play these games.
And this brings us right back to where we started. That decision to hide cash, it has a direct and very painful cost. It's one of the biggest reasons that businesses become totally unsellable.
Remember that huge 80% slice of the pie? All those businesses that never, ever sell? A massive chunk of them are in that boat for this exact reason. They've built a business valued on imaginary profits. They've built a house of cards. And no smart buyer is going to go anywhere near.
As the broker in our story puts it, when you ask why a sale falls through, the answer is almost always the same. It's the books and records, and the freaking books and records. The business itself could be great. Loyal customers, good reputation, but if the financials are a disaster, it's essentially worthless to an outside buyer.
Okay, so that's the problem. It's a big one. But the good news is, this is entirely fixable. You absolutely can turn an unsellable business into a golden goose, but it takes discipline and you need a clear plan. So let's talk about how to do it.
The way forward is what's called the 3-year rule. This is the gold standard.
It's what every serious buyer and every bank wants to see. They need 3, count them, 1, 2, 3 consecutive years of clean, accurate, and verifiable tax returns. So what does that mean for you? It means the cleanup starts today. For the next 3 years, you have to report every single dollar, 100% of your revenue, no exceptions.
So here's your action plan. Step 1, and it's the most obvious one, start reporting all your revenue, right now. Step 2, take a really hard look at your accountant. If they're letting you hide cash, or worse, if they encouraged it, fire them immediately. They are exposing you to incredible risk. Step 3, hire a proactive team. You need an accountant and a financial planner who are focused on legally building your wealth. They can set you up with tools like 401ks and pension plans that legitimately lower your tax burden. And don't ever think your business is too small for that stuff. It's not. This is how you build real, lasting, and most importantly, sellable wealth.
And that really leaves us with one final, crucial question to ask yourself. Are the habits you have today building a business that's destined to sell, giving you that incredible exit you deserve? Or are you accidentally building a business that's destined to fail, doomed to become just another number in that 80%? The choice, believe it or not, is entirely yours.